the OTC lending desk right now, like the rates that they're borrowing at is probably like 8 or 9%, right? Coinbase Bitcoin Byte loans, retail get 5%, like they only pay 5%. So we have a few institutions calling us and like, what's going on here? Like, why is Coinbase retail getting like 3% less to pay than we do? Like we're supposed to be the institution and getting a good deal out of this. And the truth is that when you're on chain and you can connect any lender with any bar, well, you get better efficiency. And that's for the first time we had a product in the Web2 world that was like fully supercharged by Web3, and we actually created a better product than something that existed on the centralized world.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the co-founder of Morpho. All of us as DeFi users should know Morpho by now. I think that the ability to open an on-chain loan is one of the most powerful use cases in DeFi. We know from all of the builders we speak to that every protocol is looking to open a Morpho market, or anyone with a token is thinking about a Morpho market. And so they're kind of at the epicenter of all these huge trends in terms of builders, in terms of like growth in DeFi, stablecoins, RWAs, tokenized private credit, anything that you can build on chain ultimately is going to need a market for lending and borrowing. And Morpho seems to be at the center of all of this.
Yeah, we talk about the Bitcoin-backed loans on Coinbase. That was just like a massive announcement. We kind of check in on where it's at today with over $1 billion of collateral now in Bitcoin, and I think up to $600 million being borrowed. But we also ask Paul, like, how big could this get? Just this one market. We also ask, like, do you think this could get as big as Aave? We talk about their decision to dissolve the equity in Morpho and have all the value accrual just be focused purely on the Morpho token. So he speaks to that. He speaks to that decision of why they did that. And we kind of talk about like what this means for the Morpho token.
So if you've ever opened up a loan on chain, or maybe you opened up a Bitcoin-backed loan on Coinbase, or you're on Robinhood and you're hoping that they launch a similar feature, I think it's very important to get caught up with Morpho's vision, because this V2 is going to take Morpho multi-chain. I think that Morpho V1 could continue to grow to tens of billions of dollars in terms of liquidity on chain. And for me, as like a longtime user, I am extremely bullish on the growth of Aave, but I think I often catch myself wondering if I'm bullish on their growth, and given all I know from an investor builder perspective in terms of the demand for Morpho, like, why would I not be equally as bullish on the growth of Morpho? And I think that's what we're trying to uncover the detail around here on this episode. So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to stay up to date on all of our new posts through the Edge newsletter, but also get real-time notifications for the Edge podcast. You can also subscribe directly to the Edge podcast through like Apple or Spotify or YouTube. If you go to our link tree, it's just edge_pod. But then otherwise, one final shout out to our sponsors. Thank you to the sponsors that make this show possible. All of the content that we make here through the newsletter and through the Edge podcast is always free. All you have to do on the newsletter is just submit an email. So everything is ungated. And if you go to our show notes, you'll find all of the awesome sponsors we have, folks like Redstone, Maple Finance, and so forth. So check them out, click on the links and learn more, and we hope you enjoy the show. Redstone is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, Redstone delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose Redstone oracles, such as Athena, Securitize, BlackRock, Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need Redstone's leading modular blockchain Oracle layer. To learn more, go to redstone.finance. And thanks to Redstone for supporting us here at the Edge Podcast and Edge Newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with Syrup USDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. Falcon Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Paul, the co-founder and CEO of Morpho. Paul, welcome to the Edge Podcast. How are you doing?
I'm great. Thank you. Thanks for having me.
We were actually talking a bit before the podcast just about, like, as you were laying out the vision for Morpho with these like individual customized markets years ago. And Nomadic and I were laughing because we just pointing out, like, we understood what you were saying, but we didn't understand how quickly that vision would play out. And so today we're used to advising nearly all of the portfolio companies we invest in to look into Morpho, create a market on Morpho. So I hope today is a conversation to catch up DeFi users and investors on the importance of Morpho, but I think more importantly, talk about what's next. You guys have had such a huge impact, and I'm just very curious, like, what could you possibly do next to like iterate on Morpho? So why don't we talk a bit about like that vision? Tell us more about like, how does Morpho scale DeFi?
Sure. So, Morpho started 3-4 years ago now, and we actually started building on top of existing lending and borrowing protocols. And that taught us a few lessons, because at the time we're probably the largest user of any like lending and borrowing platform that existed on chain. We had $2 billion deposited on Compound or on Aave. And really we learned two things. The first thing is that eventually we'll create loans for pretty much everything. And currently we can only issue loans backed by 6 or 7 collateral assets, right? And even though today it covers most of the use cases, tomorrow, it's pretty sure that it won't be the case. So we needed something that could unleash more scale. And the second reason is that, we realized how complex it was to run an integration on top of an existing platform. And if you truly want scale, if you truly want trillions to bring on top of your lending and borrowing platform, you need to be ultra resilient, including you can't really have upgradability, right? And so this was the two principles we decided to build the current version of Morpho on. Is we want to be permissionless and we want to be immutable, and we don't want to be a lending platform that manages funds for users and operate the funds for users, but we are here to build an infrastructure that other people can build on top and create their own specific tailored lending and borrowing experiences. And so that was the key mental model shift, is that we are not a lending and borrowing, product ourselves. We're just an infrastructure for people to build their tailored lending and borrowing products for the use case they need, with the risk profile they need, with the fees they need, with the compliance they need. And we just provide permissionless immutable infrastructure to do so.
Let's just talk about that a bit. You clearly chose, I would say you trailblazed a new path. And I think of it as kind of like a very modular approach. You can think about it, you're essentially externalizing risk to others. Can you just kind of break down that model a little bit more in depth?
Sure. I think until Morpho, lending platforms were funds, right? If you take Aave or Compound, for example, the way it works is you deposit your money and the DAO is going to manage it for you, right? It's like, it's a broker or like a hedge fund, but decentralized, right? It uses smart contracts, it uses token governance, decentralized governance. It's a really good innovation if you want to earn yield or borrow funds, but it's operated by the protocol itself. So existing lending platform for funds. Morpho is not a fund. I don't get to manage anything. I don't get to control anything. I'm just providing technology for people to build their own funds or to build their own lending and borrowing like use cases. And I think that's the key, shift, because as we see more and more institutions, coming into crypto and using crypto as infrastructure, as rails for their own financial services, and they want to tailor it to their specific audience, to their specific, users, well, they can leverage Morpho's toolbox to be able to build products and use it as an infrastructure in which they build their lending and borrowing products that uses the liquidity of the Morpho network, but that can be specific to whatever they want.
Paul, so a key player in like the success of the Morpho vision so far has been these risk curators. First, just in case listeners are not like fully caught up with how Morpho works, like we refer to it a lot just because a lot of our guests have a Morpho market going. But can you talk about like what exactly does a risk curator do? And then, I'd love your take on like, have they done a good job so far? Like, is there room for improvement? Like, what else are you guys looking for?
So when we started Morpho, what we call Morpho V1, which was this infrastructure vision, I was a bit scared, to be clear, that to be frank, that it was so different from whatever we've seen in DeFi that no one was actually going to adopt it, right? And that risk curators would not put in the efforts that are needed to grow their businesses inside the Morpho infrastructure. And I was very pleased to realize that very quickly people started building huge businesses on top of Morpho. Actually, some businesses are like making tens of millions of dollars every year building on top of the Morpho stack. And I've been very pleasantly surprised by how complex those players got very quickly, both in terms of like technical capabilities, but also in terms of business development. Like we now have an army of people not only looking for new risk and new creative ways to generate yield for the users, but we also have people that are looking to get integrated, that wants their Morpho vault to be listed into wallets, into exchanges, and that want to acquire distribution that will also benefit the Morpho stack. And I think building that ecosystem has been like a very exciting, thing to do. And I was initially a bit doubtful. I wouldn't say doubtful, but I was really looking forward to seeing how this will go, and now very pleasantly surprised that it's actually well received, which actually pushed us to do more and to go with giving even more freedom to risk curators, asking them to do even more things, including pricing the loans, which is a big part of Morpho V2, is like taking off the interest rate curve that you have in existing lending and borrowing platforms. And in Morpho V2, it will be done by the risk managers themselves, right? The risk curators not only will have to set risk, but they will also have to set a price for a given risk, which is a new dimension that is more complexity for them to handle, but more differentiation as well. And I'm comfortable that, they will actually action on that.
Paul, you talked about businesses kind of building on top of Morpho and how that maybe shocked you a bit at first, but I want to get into some of these large-scale consumer app integrations. And when I saw this Coinbase news that Coinbase would be using Morpho under the hood, I thought it was like absolutely massive. So for anybody that's not up to speed on this, Coinbase basically introduced Bitcoin-backed loans and then uses Morpho under the hood. So this kind of often talked about DeFi mullet, we call it, business in the front, party in the back. Maybe just talk to us a little bit about the significance of that and what you're seeing so far. Like what has the performance been so far with that?
It's a good question. Like Bitcoin backed loans are done by Coinbase and powered by Morpho is, to me, the very first large-scale consumer product that fully integrates DeFi and fully leverages the power of DeFi, right? And it's been very very interesting. So it's the very first one that has full Web2 parity in terms of like user experience with like a traditional fintech financial product. Like you don't see the difference at all with like fintech experience. Like the wallet is hidden from you, the gas is hidden from you, the chain is hidden from you. You don't see the wires at all, right? And that actually takes a lot of technology, like a lot of account abstraction. You need a chain, in that case Base, that is scalable, so it has to be a layer 2. And then you need to tokenize the Bitcoin, and then you deposit into Morpho, and then you take out the loan, and then you have to bundle all of this, pay for the gas, and abstract all of this for users. And that just proved that not only can you do as well as Web2 from a UX perspective, but now you have the superpowers of Web3. And what is the superpower of Web3? It's global connectivity. And what does that mean? Is better interest rates, better liquidity for Coinbase borrowers. What's interesting is that those Coinbase borrowers are capable of achieving a rate that is much better than what you would get into institutional rate markets right now, right? So for example, if you take the OTC lending desk right now, like the rates that they're borrowing at is probably like 8 or 9%, right? Coinbase Bitcoin Byte loans, retail get 5%, like they only pay 5%. So we have a few institutions calling us and like, what's going on here? Like, why is Coinbase retail getting like 3% less to pay than we do? Like we're supposed to be the institutional and getting a good deal out of this. And the truth is that when you're on chain and you can connect any lender with any borrower, well, you get better efficiency. And that's for the first time we had a product in the Web2 world that was like fully supercharged by Web3, and we actually created a better product than something that existed on the centralized world.
I gotta just make a quick point here. You're talking about how the DeFi rate is better than the institutional rate, and something that I thought was hilarious that came to market was Jack Mallers' Strike. Thought he came out with this revolutionary idea of, borrowing against your Bitcoin. And it started at, I think, 13 to 14% borrow rates. And he got absolutely flamed. And all the people that have been using DeFi, for the past 4 to 5 years are just like, hey, look over here. You can actually get a third of that rate on your borrow if you'd like. But, people like to have their head in the sand. So, truly amazing. Like, I think the general populace is finally exposed to a very convenient way to borrow finally against their Bitcoin. It's amazing.
I was wondering if you could go a little bit more into like, what were those conversations like with Coinbase? I know you can't share anything like confidential, but like what actually got them on board to implement Morpho on the back end? Like, I know as a user, I was excited as like a lifelong Coinbase user. And even though like I go on chain myself, I was excited to see an extension of the utility of Morpho to my friends who just use Coinbase, like where they would be able to borrow against their Bitcoin. And this also goes into like the CBBTC implementation that they did. But I'm thinking from a builder perspective, Coinbase, like maybe you could just talk about what can they control that makes Morpho such an obvious choice to implement?
Right. I guess a few things. First thing, they don't rely on Morpho token holders, or they don't rely on me on anything, right? They're fully in control of risk, of code, of fees, etc. And so what do I mean by this is the code is immutable, right? So I can't change it, right? Even if I wanted to, it would take a hard fork of Base, which, can't be forked like that. And so that's, a key value proposition for serious large scale consumer application. Like you can't have a backdoor on your backend that's relying on like a open third party like this, right? The second is really that, Morpho is permissionless, right? So tomorrow Coinbase wants a new risk profile, they can do that, right? They can open like a new collateral that they can be used to borrow against it, and they don't have to ask the permission to me, right? They don't have to collaborate with me if they don't want to. Obviously, we're super close to the Coinbase team, and we support them like we support like any other integrators in the Morpho ecosystem, but they don't have to, right? And I think those were like key decision factors for a large scale enterprise to build on Morpho.
Paul, when you're looking at this right now, I'm curious, like how big do you think this particular Bitcoin borrowing thing gets on Coinbase? Like right now, as we mentioned, it surpassed, I think, $1 billion in collateral of Bitcoin. And I'm not sure exactly how much is being borrowed. I thought it was like over 400 million, but don't quote me on that.
It's close to 600 now. Yeah.
600. So yeah, okay. Like what is your, what are your aspirations for this particular partnership? Like, could this get as big as something like Aave, for example?
It's a good question. It's only been like 4 months, right? So without getting into the specifics, like this is just the very, very beginning, like the very, very beginning. Like we are expecting to do so much more with, those kind of products. And, I think like, for example, right now, the product is available only in certain states of the US. It's highly capped. There is a world in which like this product could be rolled out more. I don't know, like I don't know what Coinbase's plans are, but it's really like the most nascent version of the product that you could think of. There are much more ambitious versions that could be built, right? And so I'm very optimistic about the future of this. And in terms of numbers, I could do a wild guess, but it's been so successful already in just a few months that I could easily, see this 10x. If you're just keeping the current growth rate, frankly, like could be very impressive, like by the end of the year.
Something else I just want to touch on too is just the education aspect that I think goes into this. So I think on the DeFi side, a lot of us that have been using these tools over the past few years, we're kind of used to this arrangement. Like, oh yeah, like most of us, a lot of people borrow against their crypto. I still think this is a new primitive to most people. I say this and I have evidence of it. I talk to my friends and they're like, hey, like, what are you doing with crypto? And I'm like, well, let me show you some stuff that I'm just borrowing against my crypto. I don't usually sell it. And they're like, wait, what? And you explain that to them and it's like, it's a light bulb moment and their head kind of explodes, right? So maybe can you just speak to that education aspect as well? Because now that we're going up the stack to major distribution, I think the understanding of some of how this stuff works is still not there. So yeah, I guess that's probably on Coinbase to tackle that like education hurdle.
It's a good question. And I actually agree with you, like depending on how you implement like crypto-backed loans, or if you want to, enable leverage through Morpho or yield through Morpho, it's a different audience that you're going to target. It's also different geographies. It's important to notice that, in Northern America, people don't approach loans the same way that they do in Europe. Like they're much more risk averse in Europe, for example, that there are in America, where like credit is much more democratized and people would borrow against their crypto to repay credit card loans, for example, or those kind of things. Whereas in Europe, it would be mostly for mortgages and those kind of things. And so because of that, and because of the infrastructure approach we're taking, we don't feel like this is our mission to educate for, every single of the 1,000 use cases that you can do on top of Morpho. And 1,000 is just like actually diminishing the actual numbers, probably like millions of use cases you could do. That said, we're obviously, helping those players getting their messages out and helping understand, while hiding the wires, why not even mentioning a chain, but helping user understand that when they connect to Morpho, when they use a service that's powered by Morpho, they access global opportunity. And they're not just talking to a specific broker that is going to, charge them a big amount. They're actually accessing a global competitive market where everybody is bidding to get the best rate.
This episode is brought to you by Mantle, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, Mantle is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow Mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi. Another area for like enormous growth on Morpho has been RWAs. I mean, all across DeFi, we're recognizing that RWAs are still so early. I think according to RWA.xyz, there's only like supposedly 25 billion in RWAs, but I'm excluding all the stable coins, of course. So hundreds of billions in stable coins. But all the other forms of RWAs are so primed for like huge growth, 100x, 1000x growth in the next 5 to 10 years. One of the reasons I love Morpho is that I don't have to wait for some new tokenized asset to be voted on to be put into something like an Aave, borrowing lending market. So I'm wondering, like, just how are you guys thinking about the potential for RWA uses on Morpho? Like, how does Morpho as a protocol, as a community, lean into RWAs?
As you said, Morpho is permissionless, so technically anyone can come in and offer their RWAs as collateral or as loan assets. So that obviously helps a lot, right? Now, in practice, we've seen different kinds, like from the most DeFi native, like structured products, to like the most institutional and blue chip, like TradFi structured funds or credit funds or ETFs and money market funds, etc. And it's been very interesting. Obviously, the latter is probably the one that will bring the most scale. We've, for example, done like Apollo's ACRED, like their tokenized fund that can be used as collateral on Morpho, I believe, on Protocol, where you can borrow USDC against that. That's been super interesting. But that's just, one example though, like many that could have like anything that can be tokenized will be used as Morpho as collateral or to earn yield.
Actually, Paul, can you just go back to a point you made about ACRED? We recently had Redstone on the podcast, and they were talking about like what a big thing this tokenized private credit fund is by Apollo. Can you just dumb that down for folks who don't know what that means? Like, what is private credit? Tokenized makes sense because then we have a token called ACRED that we can borrow against on Morpho. But anyways, yeah, what would you say to dumbing that down, ACRED?
Sure. So, Apollo Asset Management is a close to $1 trillion asset manager in TradFi and Wall Street. And they have been, with their fund called ACRED, focusing on, high yielding credit. And so that's private credit. So they issue loans to different people in like the real world, and credit that then gets aggregated into a fund and then tokenized on chain, such that on chain people can actually access it, right? And invest it, provided that they have passed like relevant KYCs and everything, of course. But then with your wallet, you can go on chain and directly like get exposure to that, right? And so those asset managers, by tokenizing those credit funds, they're now able to access all the distribution that is on chain, not only users with wallets, but also all the front ends that now plug on this common ground, which is the blockchain.
Paul, so just on the RWA front, just like how important is this vertical or sector, would you say, to Morpho's scaling growth? Like, I'm kind of curious, like how big of a priority it might be for the team. And I don't know, like how much kind of courting or like BD you do to like go out and win these partnerships, but yeah, I'm just kind of curious like where it fits on level of importance, because I know you're building infrastructure, but I know there's like a component of like you probably have to go out and get some of these deals too, or have a lot of conversations with teams.
Paul, is it the risk curators too that act as that BD role? Like that's how I've thought of it from the outside, and just Nomadic, as you pointed out, like normally protocols have to think about who do they partner with, who do they work with, who do they prioritize. But I think this is a part of the Morpho vision is you built these extremely, let's call them simple, immutable contracts so that, like real radically free markets could exist. And I've thought of risk curators myself as like these free market actors who are totally aligned with Morpho and then like kind of act like a BD for Morpho. But anyways, what do you think?
Yeah, no, that's exactly right. Like we sort of empower each other when it comes to business development. Like some curators will come up with their own opportunities and do business with this, or we would reach opportunities for our network of curators and we would present it to them. And we would say, hey, here is opportunity ABC. Go and grab it, right? Essentially. And so it depends. Like some have been, brought by creators. Some others have been brought by us, depending on each specific deal.
It's such an interesting way you've built this. Like, and DeFi that just reminded me, like, talking about the curators are like a BD arm, and then thinking through this whole relationship, I'm curious just how you monetize this and how Morpho makes money. So maybe we'll start there, but also you had a big announcement recently about, I think, dissolving the equity side, and there's now just only one way to get exposure to Morpho, and that's through the token. I know I kind of threw two questions at you, but can you kind of tackle each of those?
I think they're tied to one another. When it comes to revenue, fundamentally, the value we create in Morpho is connecting two sides of a market, the lender and the borrower. And so, the code is open, so it's not really valuable in itself. What's really valuable is the network effects. And so what do I mean by network effects is connecting two sides of a market, people that don't know each other, that we're able to connect through Morpho, right? And this in itself is value generating, and we can take a cut out of that in the forms of interest rate, right? And so we charge a cut of the interest generated by the protocol, essentially. And so we've so far haven't activated the fee switch for Morpho, similar to Uniswap, like the fee switch is not activated. However, curators have, and curators are making significant amounts of money in the Morpho stack that they can actually reinvest in the network and operate like whatever they're doing. Now when it comes to incentive alignment and equity tokens, etc., for various reasons, projects in the space have had weird structures between like tokens, equities, different like entities. And from my experience, it's always, ended up misaligning incentives very badly between investors, between the community, between the founders, the employees, etc. And the honest truth is that I could never reason about more than one. Like, I'm a person that likes to focus on a few things and try to do them well. And I could not find a reasoning in which I had two divergent incentives for two different things, for two different revenue streams. And so it just felt like a very natural thing to have only one incentive to align everybody around, which was the Morpho token.
Hey, Paul, in terms of the actions that the team took to basically dissolve this legacy equity and focus all value accrual on the Morpho token, I mean, is this just a coincidence following the regime change in the United States, like, in terms of president, regulators, and so forth? I mean, there's just like such a more like supportive attitude there, and that like obviously like that has an impact across the world, like just because of the influence of the U.S. Like, I'm curious if you can kind of speak to that as a founder. Like, you had to have felt like you were under just extreme pressure for the last several years. I mean, it really felt like DeFi was not welcome, and that you had this big bad world police officer that like wanted to, come down on all of the different DeFi builders.
So Morpho is based out of France. We're onshore. The way we're structured is we have a French association, so it's a shareholder-free entity where, of which I'm the president, and we're running and we're operating from this entity. This entity has subsidiaries in different countries, such as France and the US. But those entities don't have equity, right? They all operate under this shareholder-free structure. However, there is like only one asset, which is the token as you described. So, I mean, obviously, because of like the US being like an important country in the world, we factor in decisions and regulatory environment in the US when we take decisions. I will say that it hasn't been our main driver. Obviously, we're cautious and we, of this, but it's just been more first principle thinking. Like, I could not, like, it just made so much more sense for everybody, right? It's less extractive. It's more aligned. It's more transparent. It encourages less asymmetry of information. And, things securities law is trying to protect against. And, when securities law is advocating for decentralization, for example, the underlying reason is that you don't want asymmetry of information. You want everybody to be able to invest in things the same way. And I felt like the equity plus token model just was not good at all for this, right? Because you could not tell what share of the value is in the token, what share of the value is in the equity. And so we really took it from first principles, frankly, quite regardless of the current administration, because that felt that the thing that, not only complied with existing laws, but also felt like what made the most sense for the project and the different players involved.
Yeah, I love it. I couldn't agree more with this approach. Like, it's just kind of muddling and confusing if it's left the way it was. So kudos to you guys for being, I'd say, fairly early to doing this. I know it's not the first time maybe, but
I think it's maybe not the first, but I think we're probably the one that really wanted to be public about it, inspire others to do. I think is important. I think we're going to see a lot more projects doing that, actually.
Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
So something else I want to talk about is Morpho recently released this sort of roadmap or early thesis, I think, for Morpho v2. I'll admit I haven't done a deep dive here, but I know it involves fixed rates, like introducing fixed rates to Morpho users. So probably a big topic here, but what can you tell us about this like early days of Morpho v2 right now?
Sure. So I guess, Morpho V1 has been amazing. Like, we're close to $10 billion of deposits in total in the protocol, which is quite insane in like a year and a few months. And one thing we're realizing as we get closer to institutions and large-scale consumer is that what was not important to DeFi degens is actually important to the rest of the world. And fixed rate is a huge part of that, right? Institutions want fixed rate, and large-scale consumer want fixed rate. The problem is nothing in DeFi has been built around fixed rate, right? The constraints we've been built around in DeFi is high gas costs, low liquidity, which gets you to design things the way they've been designed with like AMMs instead of order books, or, liquidity pools with an interest rate model as opposed to like an order book as well, right? And Morpho V2 is again thinking from first principles about those problems, and is taking a very different approach to whatever has been done in DeFi so far. And it's funny because we've done 3 protocols in total. Morpho V0, which was like Morpho on top of existing lending and borrowing protocols, and called Morpho Optimizer. It was a very specific, very strange protocol. And then we launched Morpho V1, which was introducing infrastructure and risk curators. Like, we're the first to coin that term. And that's actually now being used by everybody in DeFi. And I see like truly reshaped like the way people think about DeFi now. I feel like Morpho V2 is by far the largest step that we've ever taken in the industry. And I think it's about fully going all in the free market and giving the ability for curators not only to manage their risk, but also price their risk. And as soon as you can start pricing the risk and letting the free market do this, well, you can issue loans for pretty much anything. It's not just about fixed rate. It's about free market-driven loans, market-driven interest rates. And as a result, loans for anything. You can price anything. You can price collateral, but you could, potentially think about credit. You can think about, a cross-chain loan, et cetera, et cetera. And I think the path we're going for Morpho V2 is very ambitious, but in my opinion, is necessary for the current wave of adoption that we're going to have.
Yeah, that's super exciting. And I was talking to your team a little bit before this podcast, just getting up to speed on a few things. And one of the things they mentioned was that V2 is also being designed for larger scale integrations and institutions. Can you kind of speak to that a little bit as well?
Yeah. No, talking to institutions, very quickly they were like, hey, can we do the same thing, but with like a fixed rate, fixed term loan? For many different reasons, they needed this. And so, building like a vault management solution and a lending market solution that was, capable of handling this goes a long way for them. It's not only about this, like they also want extreme granularity when it comes to like, product and compliance requirements that they may have in their respective countries with their respective rules, etc. And building a framework that, offers ultimate flexibility for this is truly, truly important. And this is what, Morpho V2 is also solving for, like extreme flexibility when it gets to tailoring the product, the compliance, the risk, and the price of whatever you're doing on chain for loans.
I think it makes sense that Morpho is the the open, decentralized infra. And so the most important thing for me is that it's immutable, that it's the trust in using it. It's very much, it has a parallel to like, why do I like to use Ethereum? Because I know what I'm getting into and I have assurance of like how the rules work with this. And that's the most important thing for me. Let the folks that build something like a Coinbase product worry about all the regulations, worry about like how to like localize that product based on like different, countries, regions, regulations, laws. It's all making sense. I guess on the V2 front, am I understanding like this is going to be multi-chain versus like what we use today is like we choose which network? Am I on Ethereum? Am I on Base? Is that about to change with V2? Like, will that all be abstracted away from, the user?
Right. So Morpho V2 has been built with in mind the growing needs for people to build different chains, right? So there's like a huge number of chains now, and it's only going to get more important, like infinite number of layer 2s, of even layer 3s now. And we are deploying Morpho everywhere. Like we have 20 instances of Morpho maybe right now. It fragments liquidity, right? It fragments opportunity. It's not good, right? So one solution could be, hey, we're just going to enshrine a bridge and we're going to manage like a bridge on all of those chains. And if the bridge breaks, like Morpho breaks, right? We're not fan of this. Like we're immutable lending and borrowing protocol. We don't really want to do that. And so, the way we did it is the Morpho way. We externalize risk management, so we're going to externalize bridge management as well, right? So the way it works is in Morpho V2, you can make intents and you can, make trades like lending and borrowing that involves a multiple chain at the same time. So you could say, for example, hey, I am willing to lend my money, but I don't really care if it's on Arbitrum or if it's on Base or if it's on Robinhood chain, for example. And then, the borrower on the other end, they don't see where the money's coming from, but they don't have to care because the money will be bridged just in time, right? And with this sort of like design where the bridge is used just in time on top, we don't have to enshrine anything. The app building on top of Morpho or the curator building on top of Morpho decides which bridge gets to be used at what point in time, but we don't. So Morpho remains fully permissionless, fully immutable, and people get to build on top and decide whatever bridge solution they prefer.
Paul, something that I want to get better at. I feel like I never take the opportunity to ask people this all the time, but like, what does the future of Morpho look like in 2 to 3 years? And when you're thinking about it, like, what attributes kind of stand out to you that maybe people now are missing or wouldn't even see coming, if that makes sense?
I've been working in lending for 4 years now, and I really took the time to think deeply about like, what the hell is like a loan, right? And the way I like to think about it is like, it's a promise of future value, right? Like you promise to someone that you're going to give value back in the future. And this promise is backed by some trust, right? As a lender, you trust someone with your money. And, the interest you accept is the sort of price of trust, right? It's the price at which you're willing to lend that money to that person. So if you feel like that's risky, you probably expect a higher interest rate. And if it's not risky, you expect a lower interest rate. Why is that interesting? I feel like Morpho, at the end of the day, is not in charge of issuing the loans. It's not in charge of deciding who gets to lend, who gets to borrow. It's here to provide the infrastructure for people to trust each other, for people to price the trust correctly, and to be able to say, hey, we don't know each other. There is like cultural, political, physical divide between each other. I just only know your address, and I know why I should trust you. And Morpho exposes you to one another, and maybe they show you the collateral, maybe they show you the credit score, maybe they show you your identity, whatever makes sense that can create trust. And Morpho is here to let the free market price that trust efficiently, price interest rate efficiently, such that people can make commitments to each other, can promise future repayments to each other. And our mission, frankly, is collapsing the cost of trust. Like, we want to make sure that human coordination as a whole can happen, and human can make commitments to one another at the lowest possible price and at the largest, possible scale. And obviously that's a bit abstract. That's a bit like cerebral and like, but that's the general direction we're aiming for with Morpho. I want to build that, machine able to price any commitment between humans. And that starts with commitments that have crypto as collateral, but, eventually it will be credit. Eventually it will be any form of commitments, financial commitment that you make to one another.
I think that response answered why we wanted to do the podcast. Is just what could you guys possibly plan for next? Because I think that if this existing open infrastructure just continues to grow, that alone makes Morpho $100 billion liquidity protocol, and not to mention all the value accrual with all the fees and what we can see going back to the actual token Morpho. But I think, though, this is probably a good place for us to start to wrap up, guys. So I want to remind our listeners, make sure you go learn more about Morpho at morpho.org. Again, there's so many markets there that Nomadic and I will refer to in Yields of the Week, or we'll be tweeting about in relation to all the different protocols that we're farming or invested in. So again, it's an absolute must. You bookmark morpho.org. And if you're a Coinbase user, you should be looking for that product to be able to borrow against Bitcoin liquidity. And just know that on the back end, it's powered by Morpho. And then you should follow Morpho Labs on X. Follow Paul's personal handle. It's Paul Frambot, if I'm saying that correctly. I probably mispronounced it. His it's Paul, and then last name is Frambot. We'll put that into the show notes, though, so you can easily find it. And then, Paul, thank you so much for your time. So excited for what's next here, and really appreciate you just sharing all this detail with us. But any final word for us before we go?
No, thanks for having me. That was great. Excited to continue building in DeFi.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.